A trend is the overall direction of a market or an asset's price and are made of peaks and troughs. When the price is moving in one overall direction, such as up or down, that is called trend. There are three directions of trends: an uptrend, bull market, when the overall direction of a market is up; a downtrend, bear market, when the overall direction of a market is down. There are situations when there is no trend and the price moves sideways in a horizontal range, in other words, sideways trend. The lack of trend, a period of time where there is a little overall upward or downward progress, is called range or trendless period. An uptrend is characterized by higher swing lows and higher swing highs. A downtrend is characterized by lower swing lows and lower swing highs. To determine trend direction or its changing signs, traders use both price action, which is price movement on a chart, and the other technical tools such as indicators or trend lines. Nothing moves straight up or down for long, so there will always be oscillations, but the overall direction needs to be higher or lower in order to be considered as an uptrend or downtrend. Uptrends or downtrends occur in all the markets. For an uptrend, traders want to see the price moves above recent highs, and when the price drops, it should stay above prior swing lows. This shows that even though the price is oscillating up and down, the overall trajectory of the price is up. The same concept applies to downtrend, with traders watching to see the price makes overall lower lows and lower highs. While the trend is up, traders may assume it will continue until there is evidence that points to the contrary. Such evidence could include lower swing lows or highs, the price breaking below a trend line, or technical indicators turning bearish. Let's get to the chart. It is Nasdaq's 100 futures market at the daily time frame. At your screen, beautiful example of an uptrend. Market moves upwards, forming higher highs as well as higher lows, with overall direction up. There was some uncertainty at some periods, as you can see, especially at this area. However, market continued to climb. If we move to the right for a bit, we can notice that the trend direction obviously changed, forming lower highs and lower lows. Pullbacks are quite significant, as you can see, but overall direction is still downwards, until market starts to trending upwards once again, forming higher highs and higher lows. Let's switch to other market for another example. At this specific part of market data, you can notice that even though the market swings, but there isn't clear higher highs or lower lows. Maybe at this period, but anyway, market stayed in specific range. That would be side trend. Same would be if the price trending in horizontal channel. To identify trends based on the price action is not that difficult, but sometimes can be some uncertainty. So it is extremely important to identify trends at different time frames. It might be situations when in different time frames there is different trends at some point. So you have to make your trading decisions based on the different criteria. Therefore, you have to identify three main trends: primary, long-term, daily or 4 hours time frames; secondary, intermediate, hourly or 15 minutes time frames; and minor, short term, which is trading chart, 5 minutes time frame or 1 minute time frame. Trends are affected by the next longer and next shorter trends. A rising long-term trend causes the intermediate trend to have longer rallies and smaller retracements. A falling long-term trend causes the intermediate trend to have smaller rallies and longer retracements. Let's take a look at the chart. It is the OX40 futures market at the daily time frame. Currently, overall direction of the market is clearly up, uptrend. If we switch to hourly time frame, we can notice that until this point, trend were up, but it then starts forming lower lows and lower highs. So at hourly time frame, trend would be down already. Let's switch to 5 minutes time frame now. From a very first sight, trend direction is clearly down. How long it's going to trend downwards? No one knows. Keep in mind that trend direction in daily time frame is still up. Many traders intend to trade in the same direction as a trend. While the trend is up, traders focus on buying, attempting to profit from a continued price rise. When the trend turns down, traders focus more on selling or shorting, attempting to minimize losses or profit from a price decline. However, it depends on your trading style and strategy. During day trading, the most important is to follow short-term trend and do not trade against him. Identify key points of intermediate and long-term trends, and if trends comes in a line, even better. Best way to identify trends is visually by price action, as we have done already. Another common and simple way to identify trends is by using trend lines, which connects a series of points in a chart. Uptrends connects a series of higher lows, creating a support level for future prices. Downtrends connects a series of lower highs, creating a resistance levels for future price movements. In addition to support and resistance, these trend lines shows the overall direction of a trend. Let's quickly look at the chart. As you can see, overall direction of the price is obviously up. Let's take a line and connect series of higher lows. This is the area where we can expect market to continue its trend upwards after its minor retracement. Trend lines should not be relied on exclusively to determine the trend. Most traders also tend to look at the price action and other technical indicators to help determine if the trend is ending or not. With trends, as well as with waves, there is few kinds of trends. Slow trend, climbing or falling, when overall direction of a market is moving in one way without significant price changes. Fast trend, climbing or falling, when overall direction of a market moves in one way with quite significant price changes. Sometimes, slow trend accelerate into fast trends, showing increased buying or selling pressure, or vice versa. Fast trend lost momentum and turned into slow trend, and even produced some trend changing signs, patterns, etc. For instance, as you can see on your screen right now, market forming lower lows as well as lower highs without significant movements. Slow and steady moving downwards. That would be slow falling trend, which afterwards accelerated into fast falling trend, where swings becomes quite significant. I'll repeat once again, that trend direction or changes of a trend direction is not a trading signal. It is part of technical data for your further trading decisions and overall expectations of a market. Let's speak about trend changing signs now. When to expect a trend to change its direction by looking at naked chart. First and simplest way would be trend line. When price breaks trend line, it is a sign that trend direction might change. By break, I mean price should break and stay there. Because there are many situations when price tests these trend lines. When one candle crosses and another breaks below again, with quite huge impulse. Let's get to a chart. At your screen, long time tested trend line with many confirmations. As you can see, at one period intends to break above and signaling trend changing. However, price turns around with nice impulse and market continuing to trend downwards until this period, where price breaks trend line and stays there. Trend direction clearly changed, as you can see. Another way to identify trend changing is by looking at lows and highs. For example, when market produces lower highs and lower lows at uptrend, it's pretty decent signal that new downtrend might continue its movement downwards. Same would be with downtrend. When market produces higher highs and higher lows, that is a signal that new uptrend might continue its movements. Let's take a look at the chart. It is Nasdaq's 100 futures market at hourly time frame. Market trending downwards. Slow trend accelerating into fast trend and continue its movement downwards. Until this area, where market produces higher highs and higher lows. Trend direction clearly changed and market is moving upwards. Keep in mind that these trend changing signals is not 100% accurate. At the trading is nothing 100% accurate. It's just another small signal of prediction further movements. As everything else, trend changing should be confirmed with few technical analysis tools. For example, price action and few or at least one indicator. Note that before using any technical indicator, test him to know its flaws and success rate. Also make sure you know where and how to use it correctly. By looking at trends and kinds of trends, you can expect quantity of points you could take at the given trade. For example, to expect huge profits at slow trend would be not realistic. Of course, it happens when slow trend accelerates into fast trend at the right direction and your profits might be reached. But statistically, it is a rare case. The best thing for traders is to take best possibility by facts. With fast and quite big movements of market, you can expect to take bigger profits. Everything is logical, nothing special. Remember that your expectations should be realistic, based on facts you see at trading chart and at this specific trading environment. Slow trend, lower targets. Fast trend, bigger targets. However, even at fast trends, better would be not to expect to take much points and be happy with lower targets. In this way, you have bigger chances that your target will be reached. Shortly, do not be greedy, be happy with what you got, and be realistic. Thanks so much for watching, and if you found this video helpful or interesting, please give it a thumbs up. It really helps the channel to grow. And if you'd like to see more content like this, make sure to subscribe and hit the notification bell so you don't miss any future videos. I would also love to hear your thoughts or questions in the comment below. Thanks again, and I'll see you in the next video.